get on with it to tell us more about, I guess, reflecting on some of the data that we've seen already here in Australia. The home price data comes to mind, the building approvals data comes to mind as well. Is Anthony Landau. He's joining us from Equilibria Finance. Anthony is here with us in studio. Great to have you here at
Thanks,
Barangaroo.
Nadine. Nice to be in the studio.
Yeah, good. So what's your current thinking about the state of the property market given the new information that we've got this week?
Yeah, sure. A lot of focus has obviously been on the stock markets, but obviously properties are a massive asset class, and what we've been seeing is a little bit of recovery and resilience in the latest core data logic. Obviously there was the highs we were going into up till the end of April, where we'd seen about 24% growth annualised. It's come off about 10% since then, but some reporters were talking of 20-30% drops.
Yeah.
So we have seen a little bit of resilience in the market. That probably comes on the back of, I guess, some of the social distancing measures and some of the relief packages kicking in with the JobKeeper and people having some more certainty about their situation. So I think across the board, there's been some resilience, there's been a little bit of recovery, but obviously the market's still seeing drops.
Anthony, sorry to interrupt. When it comes to demand for housing credit, so we saw some credit figures out from the Reserve Bank of Australia earlier this week. Now, owner-occupier finance seems to be ticking along okay. Investor finance is still going backwards at this point in time. What are you seeing from your position?
Yeah, that's very reflective of what we're seeing in the market. There's a lot of owner-occupier activity, particularly new buyers trying to get into the market and capture an opportunity. With investors, we're seeing two types of behaviour fundamentally. We're seeing those investors who are looking for an opportunity, who might be experienced investors waiting to see what happens in the market a little bit, but they're looking for opportunities. The other investors are essentially those we're seeing trying to hold on to their properties.
Okay.
Investors don't like to sell their properties. They might have their own personal situation and distress from loss of a job, plus the rental distress being caused. So we're seeing a bit of a split market with investors, those looking for an opportunity and those trying to hold on. And it may be in September, as we see JobKeeper come off, as we see some of those stimulus packages impact the economy more, it may be that some of those distressed properties come up for sale and those investors pounce on them. But yeah, from a finance perspective, investor activity is down, but there are those who are still looking for opportunities.
What about the finance insights that we can glean from what's happening in commercial property right now specifically?
That's a tricky space on two fronts.
Yeah.
Firstly, we've obviously seen a drop in demand for commercial space, no doubt about it, and we're seeing a drop in rents. We're seeing a lot of businesses rethinking the use of commercial space and the rethinking of how they operate their businesses, and that's flowing through to not only rental yields but also property prices and demand for properties. So the activity in the property market has slowed right down in terms of demand for new commercial premises. That's flowing through to finance, obviously less people looking for commercial finance, but we're also seeing there's a lot more difficulty in obtaining commercial finance. We're starting to see some of the more, I suppose, consumer type regulatory activity creep into commercial finance, making it harder for those looking at funding either their business or, to your point, commercial property. It's making them harder to get the funds in already a pretty difficult time. So it's a tricky market, commercial space right now, in terms of both new properties coming on the market and particularly in the demand space.
Okay. Residential construction is obviously a massive story at the moment, massive employer around the country. There's been some stimulus measures being put in place by the government. Have you seen any response? I know it's very early days, but any response to a lift in demand when it comes to the likes of building new homes or doing renovations?
In the short amount of time we have. We've seen it in response to a couple of things. The Home Builder program, there's people now looking at building that into their finance structure, and to the providers' credit, they've reacted fairly quickly to that. We're also seeing the First Home Loan Deposit Scheme. There was a new round of funding put out by some of the providers on the 1st of July to help those with a low deposit get into the market. So we are seeing a response to that, and a fairly quick response by people who have the ability to get into the market and have the funding. Obviously, there's some issues around the home builder with some of the eligibility criteria, but fundamentally, we're seeing absolutely an increase in behaviour. Probably one comment I'd make is that, on the flip side, another thing we're seeing is a lot of land and packages where people may have put a deposit down. we've seen 1 in 10 of those deposits have to be basically handed in because the value of the properties has dropped or the value of the land's come down.
Okay.
So there's some challenges on the other side with valuations coming in and people now not being able to obtain the finance for something that a package that they had been planning for a while.
Okay, so that's a risk that not. No, I don't think many people will be talking about that, but obviously something to go and keep an eye on moving forward. Look, let's get tied all together. Now, you could say where you were maybe 2 months ago compared to sitting here now in the studio with us. Are you feeling more confident about the outlook for the property sector, or how are you feeling right now?
I think the sentiment's absolutely picked up. I think 2 or 3 months ago there was talk of a collapse, if you like, a 20 or 30% drop in the market. That's been about 10% from the data that's coming out. I think what we're seeing is resilience in the market. We're seeing a lift in activity since some of the government imposed, I guess, things around coronavirus have been removed. So I think the next hurdle is going to be around September. I think we're going to see a reasonable couple of months in the market. There's a lot of activity on the finance space for people trying to get in the market. I think some investors are sitting on the sidelines ready to go. There's an increase in supply on properties now because the values haven't fallen as much as people may have thought. But I think September is going to be an interesting time with some of those, with JobKeeper coming off, with some of those other stimulus measures that the government have put in place, such as relief packages for homeowners and small businesses expiring after the 6 months. That'll be an interesting transitional time to see if the market holds up. But there's definitely a spring in the step of the market compared to a few months ago.
Yeah, not as bad as it could have been, but we've still got some big challenges coming. That September cliff.
Yeah, I think everyone will be watching that period of time. Anthony Lundell from Equilibria Finance, thanks for joining us in the studio.
No worries, thanks
welcome
for
back.
having me.
Welcome back anytime.
Great to be here.
Good to see you in person. All right, we're